Hello, my name is Nur Daniela Tira, and I will start this discussion with the introduction of SME. SME are businesses that are not large enough to be classified as large enterprise, but not also enough to be considered micro enterprises. They are often owned by individuals, small group or partner or family-owned business. For manufacturing, SME have a sales turnover not exceeding 50 million or full-time employees not exceeding 200. For service and other sector, the limit is a sales turnover not exceeding 20 million or full-time employees not exceeding 75. Next, we move to the introduction of financing gap in Malaysian small-medium enterprise, a supply-side perspective. So what is the issue? The issue here is a critical financial issue accounted by SME. This issue have occurred when there is inconsistencies in finance because many SME companies struggling to make a bank loan. Due to lack of qualified demand, bank claim lending to SME is low. The government also make an initiative move to settle this problem with provide extensive support. The government has invested a significant amount of money to assist SME through a variety of measures including loans, subsidies, guarantees and venture capital. Despite this effort, small and medium-sized enterprises continue to face significant financial concerns. In Malaysia, the discussion and SME research funding are often focused on the problem SME face in obtaining institutional funds. So, today we would like to discuss about the mismatch between demand and supply side difficulties in SME finance and organized into 4 sections.
There is assumption arise on the SME. In the term of economy, SME gets a little lower of concern compared to the large enterprise. This is because the size of the company affected the issue of how the ability of the company to raise a fund. Should not be the issue because they only need to make sure that the company have a complete information and structure market. There is also a study stated that SME faces a lot of challenging financial situation compared to the large enterprise. Banking systems underserve the SME including limited access to the export, leasing and long-term finance.
Next, I will talk about the demand side perspective. The major challenge is assessing financial resource, particularly at their seed, startup and growth. First, we have to define the problem. There is specific definition to assess financial service. Classic 2006 and Merge 1999 have provided specific definition and classify them into different dimensions. The dimensions are availability, cost and range, type and quality of financial service offered. Next, the information asymmetry is a commonly used theory to explain the finance gap. According to Berger and Udell 1998 and Patterson and Rajan 1994, the finance gap might be attributed to information asymmetry, which leads to credit rationing by bank lender. They also claim that SME not financially sophisticated enough, meaning that SME are no need to participate in the formal financial sector or cannot afford market interest rates. Why government need to help SME to access finance? It is because this will help to overcome this challenge.
One of the issues of supply side is there is a barrier flow of institutional funds to the SME sector. There is cost effectiveness of loans to the SME. The higher the loan amount, the lower the lender's inspection cost per unit of loan. This is happening because of connection between loan and firm size. SMEs also incur a high operating cost, which is cause of the lack of ability for SME to aim a high profitability, and even if they success, their margin are more lower than other sector than SME. The next constraint is due high transaction costs. They argue that banks do not find SMEs to be profitable due to high transaction costs. There is also an issue when a borrower has information about the firm that the lender doesn't have that we call as asymmetric information between borrowers and lender. SMEs can be described as informational opacity when the records of the firm is limited, such as lack of any credit history or formal records. Even using the existing records, they are assumed to be incomplete and inaccurate. Next is lack business plan of SME can give a negative perception to the creditors as they can see the future of success of the business as the ability to pay back to the credit suppliers. It is hard to forecast the financial of the business as the plan is not complete and unconvincing. The last one is the issue of lending technologies. They argued that large institutions have a comparative advantage in transactions lending based on hard information including financial ratios and credit scores. They use the differences in lending infrastructure to explain their financing problem faced by SMEs.
Hi, my name is Rushalika Mazi. I want to present about mainly issue with excess supply versus unfulfilled demand. First, supply. These two important which is SAP are the thrust of Malaysian economic policy. Thus, changes domestic demand through formal infused dynamic into the economic sector. Second, SME are the infuse for broad-based economic growth. They provide linkers between sub-sector in the Malaysian economy. For the unfulfilled demand, they have a few issues for SME. The first one, SME are often unable to access global market and are limited in their performance in increasing open, competitive domestic market. SME is difficult to access functions like trading, market intelligence, logistics, and technology. Next is SME are also unable to take advantage to market opportunity that require large volume, homogeneous standard, and regular supply because SME has a lot of the financial resources. From the issue, the government makes so many ways to handle this issue. The first one is government has developed and implemented various development program and allocate significant fund and resource to fuel the fund to grow of this sector. Next is the most important to deal with this issue is making loan more accessible to any borrower is the financial symmetry between the borrower and the lenders, where borrower have private information about the firm. Not only that, the government also needs to rationing credit by limiting the loan amount and increasing interest rate are the solution to limit the risk of the lenders.
Thank you, General Shafiqah. Now let's move on to the next topic, which is SME funding, access fund. This is focusing on three key aspects of SME funding, which are environment, risk, and transaction costs. For the first part is environment. Street banking loan limit unsecured loan and requires strong collateral, which most SME lacks. Asset like Malay Reserve Land can be sued. Missing document and complex condition like land conversion delay approval. The CGC helps but added more steps. Bank also need proof of SME saving, which is hard for startup. Disbursement depends on borrower meeting asset-related condition. For the second part is risk. SME are seen as risky due to poor record, so bank gives modern loan or charge more. Agency like SME Bank and Exim Bank support this borrower. Credit bureaus and council help reduce risk and improve loan approval. SME support unit also guide businesses on record, plan and loan help. For the last part is transaction cost. SME loans are costly to process due to small size, unclear borrower info and lack of financial record. Bank rely on relationship lending, which take time and add cost. Approval delay and unmet requirements are often slow or cancel the reimbursement. Thank you. Now I will pass the slide to Ifah.
Unfulfilled demand for SME funding. Constraint from achieving economies of scale in the purchase of inputs like equipment, raw materials, finance, and consulting service. This is because they are unable to access global market and are limited in their performance in increasingly open, competitive market due to their size. It is difficult for SME to access functions like planning, market intelligence, logistics, and technology. Also, they are unable to take advantage of market opportunities that require large volumes, homogeneous standard, and rigorous supply. This also because often lack the financial resource to innovate and upgrade their operations in order to participate in international markets such as improvements in product design, logistics, and marketing. Lack of accessibility to institutional funding is timeless of approval and disbursement, which take more than 3 months, and the time taken becomes more longer for smaller size loans. This is because loans take too long to process or repayment terms are inflexible because some loans are too big and risky that discourage the SME from borrowing even they are eligible. Furthermore, the long processing time in validating information from borrowers, proposals often leave the borrowers with a tight cash flow position. Lastly, high perceived risk by lenders because small loans are risky. This is because SME typically lack collateral like property or equipment. There are also cash flow may be unpredictable, especially in early stage of their business. If they are new, they likely don't have much credit history. As a result, banks reject their application or offer loans with a high interest rate. SME facing many challenges issuing finishing due to lack of the financial resources to create proper documentation. The main issue is demand side and supply side problem. For example, SME difficult to make the loan because of the high cost on the lender side. As a suggestion, SME need to use future research so that it can reduce costs and also SME can improve the loan process.